Good morning, gang. Good morning. Welcome back to this week's Bitcoin update. First and foremost, remember, nothing discussed today is financial advice. This is just for educational purposes only, and it's my view of the markets. And now that's out of the way, let's jump into the Bitcoin chart, shall we? Right, let's have a bit of a speed round today because there's not actually much to update. So following on from last week's video, when price was hovering around down here in this tight range, again we're looking on the daily chart here. Okay, what we're talking about on YouTube last week on the last update, saying if this small range holds, okay, and we don't end up coming down to backfill this wick, then we can look for a move up, okay? And if we were going to get a move up, his chances are it's going to be thin and fast, just like the move down was thin and fast, okay? So we talk about this time and time again. When you get a thin, inefficient move like this, yes, there's lots of volume behind it, but it moves so fast, it doesn't let anyone participate, so it's a thin and inefficient move. So just like we got this, which then caused this when we got acceptance back into it. So just like this causes this once we get acceptance back into it. Okay, this is just how price moves through inefficient areas. Okay, so just because you have a thin inefficient move up, it doesn't necessarily mean that it has to come back down through it, because obviously you can range and then start a trending environment like this. But it does mean that the minute that we do come back into it, chances are it moves through it fairly fast. Okay, so that's what we're looking at here. So this is where peak FOMO comes in. This was, I think, was to do with the Blackrock or whatever winning some case against the SEC. Again, I don't really pay attention to the news because it's irrelevant. It's irrelevant to how I trade. I trade the key levels. I don't trade when a news event happens, because otherwise, if you did that, then you ended up chasing this candle and you likely longed up here into resistance and it rolled over. Okay, so now you sat underwater currently. Okay, could this continue up? Yes, it could. Could it continue down? Yes, it could. Nobody knows. Okay, nobody. I'm not going to sit here and LARP and tell you that I do know. Just like, as I was saying on last week's video, I'm not going to sit here and LARP and say that this was the strongest resistance, because it wasn't. As I said on last week's video, if you go back and watch it, I said, this is your first resistance, but I'm not that interested in it. And at the time I wasn't. But this sticky zone up here is your stronger resistance, okay? Which every man and his dog, regardless of your trading style, you could see that this was the stronger resistance, okay? This was the consolidation that led to a sell-off. So if we do come back into this consolidation, it's going to be a sticky zone, okay? But in the end, we ended up bouncing from the point of control. Now, I was doing a live stream for the members on the Tuesday, and I was talking about this. And there's a reason that this level ended up becoming a little bit more appealing at the time. And again, it all comes down to how price comes into your area of interest. But in the end, came up to this point of control, which is also the local golden pocket / algo pocket region. Okay, so we do have resistance here. Okay, even though it's within this thin zone, it's still localized resistance. Okay, now on the move up, we need to discuss this. So let's come out of this chart and let's go into the TPO charts. So we can see obviously the thin inefficient move down. Obviously this was the big wick down that day. Okay, which we left a bunch of single prints here and a bunch of single prints here. Okay, as I was posting on our Twitter account, if you don't follow us on Twitter, by the way, you should follow us on Twitter because we post more frequent updates. Okay, as I was saying, the main areas on the chart that you needed to pay attention to when we're in this range here with these single prints here, start to get acceptance back into them, and chances are it's going to squeeze. Okay, and to the downside, we're talking about Tuesday's lows being the key support. Okay, if that got lost, then chances are we're going to start filling in this big wick down here. Okay, or this buying tail. Okay, in the end, we got acceptance back into the single prints, and we came all the way back up, and we ended up filling, near as damn it, the top single prints as well. Okay, at the top of the move. So another reason why we stopped where we stopped. Okay, so, well, what does that mean now? So if we're looking at the chart where we moved up, which is obviously Tuesday's chart, Tuesday from this week, we've again created some single prints. Okay, so this is the thin, inefficient move that I'm referring to. So right now, we need to pay attention to these single prints, because if we get acceptance back into these single prints here, then there's a good chance that we then fill these single prints out entirely and likely come back down to this time point of control down here. Okay, which is roughly around the weekly open region. So it's something to pay attention to. If we get acceptance into single prints, then we can be looking at lower prices. Okay, at least these lower prices, potentially lower. Okay, but again, we're just trading level to level. So that's something you need to be aware of right now. Okay, so as a recap of last week's trades that we normally run through, there's none to run through, because quite simply, we're in this long range-bound environment. Obviously, after a big sell-off like that, you do expect consolidation afterwards, and we ended up just staying within value. Apart from the odd deviation, okay, outside of value, we ended up staying within value. Obviously, we did have the weekend highs and the weekend lows swept. We can see here, this is the weekend price action, and in the end, Sunday night, we had the spike up. Monday morning, we had the spike down. We took out the weekend lows, okay? Then we took out the weekend highs. Then we came back down, and again, just hovering within this value region before that pump up. Okay, so for a low time frame trader, you had a really nice range there to trade. Absolutely fine. Personally, I wasn't interested in this range. Too tight. I prefer to see something a little bit more juicy, okay? So, that's zooming out to where we are right now. So here we go. Obviously, before I jump into what I'm looking for next, first and foremost, big shout out to this week's video sponsor. This week's video sponsor is BingX. If you don't know who BingX are, they are a crypto exchange that also offers FX, commodities, and stock trading. Okay, so you can use crypto as collateral. And if you do decide to use these guys, it's a non-KYC exchange. So for you guys living in countries where you can't do KYC, then it's an option for you. You can get up to a $5,000 deposit bonus, and the first 50 people that click the link will also get a $100 trading bonus as well. Okay, so once again, big shout out to BingX for sponsoring today's video. Right, moving on. Here we go. So what we're going to look at right now. Well, first and foremost, zoom out to the daily and let's look at the ranges that we've got going on. Okay, so the same ranges that have been in play, and we've been talking about this for quite some time now, are still here. Okay, so we've got the top range. Then we've got the bottom range. Okay, now we can see here after this big wick down here, again, this only happened on a couple of exchanges. This didn't happen on all exchanges. So there is still on other exchanges resting liquidity under here. Okay, so keep that in the back of your mind. No matter what we talk about today, keep that in the back of your mind. There's still resting liquidity down here. So just because Bybit's taken it, other exchanges haven't. Okay, or the big exchanges as well. So if we do start to drop from here, let's go down first. Okay, so if we do start to drop from here, as I mentioned, those single prints are just below us. Okay, and if we do end up coming down here, we can look to move through them fairly fast. Now, at this point here, back into this consolidation, we've got to see if we get a bullish reaction or we don't. If we get a bullish reaction, then we can start potentially looking for longs. Okay, so what you want to see is you want to see that change in structure. You want to see people heavily shorting this, especially down at the lows. You get the FOMO trend chasers. And then you want to see a reversal. Okay, so you want to see people trying to push price down, but not doing a very good job to give us the long opportunity. Okay, but again, no rush. No rush. See what the market gives you. Let the market show its hand before getting involved. Okay? So that's if that consolidation holds. If that consolidation doesn't hold, then we can start looking to come down to take out these lows that we've been referring to. Okay? If we do end up coming down and taking these lows, then get a change in market structure and we get a bit of a reversal going on, then it's the time to look for longs. Okay? If you don't get that, and it just continues to roll over, then unfortunately, then we're looking down at lower prices. Obviously, first things first, you got your EQ to contend with, but more preferable will be the stops under these lows, okay? If that doesn't work, then you're looking back down at the range lows overall, okay? Now, what happens if we continue up? Because, you know, bullish news and all that good stuff, and, you know, everyone's got peak FOMO at the moment. Well, if we do start going up, okay, as I've said before, we've got to pay attention to this zone here. Okay, this sticky zone here. You see we've got a high volume node here, which is referring to this consolidation here. So if we do come up into this and get a good rejection, then I'll be looking for shorts. Okay? If we don't get any rejection there, and price just keeps going straight up, then, oh, didn't mean to go that far back. There we go. And we'll continue going straight up, then we can look for range highs. Now, once again, at range highs, is it a simple rejection from range highs? Or is it take out the highs, then get the rejection? Or is it just straight up? Okay, that's what we're going to ask ourselves. Okay, if it does go straight up, then, as I've said many, many, many times, I'll be looking at 38 to 40k. Okay, if it gets above that, then we're looking at these range highs up here. So we're looking at around 45, 46k. Okay. So it's just a level to level environment. But for as the time being right now, this range here is still in play. It's still in play until it's lost. Now that's either losing it to the downside or losing it to the upside. Either way, it's still in play. Okay. So that's it. So that's a really quick update for today. Obviously, if you guys want access to my daily plans and understand how I trade and to trade like me, then first thing to do is come over to our website. The link's down in the description, and that's spitfiretraders.com. Once you are on our website, you've got access to our free Discord here. And obviously, if you do want to take your trading to the next level, then come on the Join Us tab, scroll down, and for the grand old price of $59.95 Great British Pounds, or roughly $75 US, you can pay with crypto if you like, then you've got access to our educational library that's got over 30 in-depth educational modules now to learn through in your own time. So everything from absolute beginners through to advanced trader. Including trading psychology, entering and managing trades, Fibonacci, Elliott wave theory, order flow, obviously understand how to read the TPO charts and how to understand them and interpret the data. And you'll also get all these templates as well, because all these templates are within our cheat sheets. Okay, so all these templates that I've created for you, and how to read them and understand them, and how to help get this to aid you in your trading journey. Okay, so if you want access to all that, it's going to cost you the grand old price of $59.95. Okay, so if you like the video, don't forget to hit that like button. If you're not subscribed, make sure you do. And until next time, gang, as you were, bye-bye.